in this video, I wanted to briefly go over some upcoming catalysts that are literally about to come out here in the following days. So let's not waste any time, and we're gonna get right into this one. And one thing we have coming up is the FOMC meeting. We are gonna get our next either rate hike, pause, maybe even projections of rate cuts in the future. Now, where do I stand? I think it's possible that we see one more rate hike. I think it is unlikely, and I'll say this again. The Fed has said this a million times, and so have I. The rate hikes are still yet to be felt in the market. All of our data is lagging and only gives us what we've seen, not what we're going to see, and not even what we're seeing presently, necessarily. This is an important time in the market. There's going to be a very big week, and we are going to see what the Fed's going to do in the next couple of days. And also something else big. This is actually coming out tomorrow, and this is going to be CPI. And the Fed will be able to quickly look over this before their final decision on the 14th. Our last CPI was in April at 4.9%. I suspect us to be somewhere in the low 4s to mid 4s, maybe 4.5, maybe 4.6. But yes, I do expect this trend to continue. And one thing to consider is, while the Fed did say they're consistent in their goal to get inflation at about 2%, that doesn't necessarily mean they're going to continue raising rates until they get to that 2%. They could stop raising rates in the low 4s. They could stop raising rates in the high 3s. We could have even possibly seen our last rate hike. But regardless of if we get another hike or not, in reality, we are at the tail end of these rate hikes. And I think the Fed changing stance will be a great thing for the market, specifically small caps, specifically companies that need to pull out debt at a high interest rate. And PPI, or Producer Price Index, is also coming out, and is going to be on the 14th. Now, you'll notice a huge trend with the PPI, and it is actually now in the 2% area. And typically, PPI is a little bit ahead of CPI. If you see PPI coming down, typically you're also going to see CPI coming down as well. But you'll notice where at least PPI is concerned, we're already at the Fed's target of 2% just about. And I do think this will continue trending down. Same with CPI. Now, I also wanted to show you the SPY. We actually broke out of this broadening pattern here, this long downtrend we've been in, bounced up out of it, retested it, and we started a new uptrend. So if we do pull back, I am watching this yellow trend line, this yellow ascending line here. But you'll also notice that we had a golden cross here. That's a good sign. And we are creating higher highs, higher lows. We broke out of a previous high here in February. And while we are very near overbought on the RSI and the SPY is likely to cool down soon, I do think this can continue pushing, especially depending on what we get for CPI and the FOMC. And if you were going to play the SPY in a short-term mindset, I think about 420, 419 would be a great stop loss. But be aware that, it can drastically fall if we get some bad CPI data, if we see an aggressive Fed. So I would tread carefully, knowing that this has been running up quite a bit over the last couple of days. And quickly glancing at the overall market, I'm quite surprised that we're pretty green across the board, despite some potential uncertain events coming up. So I will say, tread carefully. This is going to be a very volatile week with potentially huge moves up and huge moves down. But let me know what you're doing to get ready for the FOMC meeting and CPI and PPI's release this week. And stay tuned, because I will be trying to cover CPI, PPI, and the Fed meeting when it all comes out. But thanks for watching this short video, guys, and have a good rest of your day.